Hello, my name's Lenny. Welcome to this financial literacy course. This week's module will be focused on bank accounts and automatic transfers. You may watch it as often as you like. You should watch the video before our in-class sessions. This will help you to prepare for the class. By participating in this class, you are taking an important first step to building a better financial future for you and your family. Before we begin learning something new, let's review what we discussed in class: creating a spending plan and keeping records. In class, we discussed two types of expenses: fixed expenses and flexible expenses. Do you remember the difference between these? Fixed expenses do not change from month to month. Flexible expenses often change from month to month. Let's look at some possible expenses you may have each month. You may pay rent, car payments, insurance, food bills, electricity, water, or field trip money for your child's school. Which of these expenses are flexible expenses and which are fixed expenses? Place each of these in the correct column on the chart. You should have placed rent, car payment, and insurance under fixed expenses. You should have placed food, electricity, water, and field trip money under flexible expenses. Now I want you to look back at your notebook. In class, we created a list of your monthly expenses and a list of your income. After you filled in these columns and calculated income minus expenses, could you discover any ways that you may be able to lower your expenses each month? Can you spend less on your flexible expenses, such as food or gas for your car? A few tips for you to think about. Consider what you need versus what you want. Always make a grocery list and develop a spending plan. Don't be afraid to review this at home. Cutting back on expenses will take the whole family. Okay, now we will begin our discussion of bank accounts and automatic transfers. Banks and credit unions are businesses that offer you a safe place to keep your money and use your deposits to make loans. These institutions are safe because money placed in them by customers is insured and protected. Banks are for-profit financial institutions. Banks make loans, pay checks, accept deposits, and provide other financial services. Credit unions are nonprofit financial institutions owned by the people. You must become a member of the credit union to keep your money there. Credit unions accept deposits, make loans, and provide other financial services. Both types of financial institutions operate under federal and state laws and regulations. Deposits in insured banks are insured by the FDIC up to $250,000. This means that if the bank were to fail, the FDIC would return your money up to the insured amount. You can tell if the FDIC insures a bank by the displayed FDIC logo. Most credit unions are insured by the National Credit Union Administration. The deposit insurance rules are the same at NCUA-insured credit unions as they are at FDIC-insured banks. Why should you keep your money in a bank or credit union? 1. Security. The FDIC and the NCUA insure deposits up to the maximum amount allowed by law. This means that the FDIC or NCUA will return the money to the customers if a bank closes and cannot give its customers their money. The second reason is convenience. You can get money quickly and easily. Using direct deposit, for example, allows you quicker access to your money. Online banking allows you 24-hour access to your account. The third reason is cost. Using a bank is almost always cheaper than using other businesses to cash your check. The fourth reason is safety. Your money is safe from theft, loss, and fire. The fifth reason is your financial future. Building a relationship with a bank establishes a record of paying bills. It can help you save money, and it can help with getting a loan. The sixth reason is saving. With money and savings, you can handle irregular expenses like car repairs, even if they don't fit into your monthly budget. Okay, today's video is focused on bank accounts and setting up automatic transfers. Bank accounts are an important step to good jobs, receiving loans, saving money, and securing your money. The first bank account most people open is a checking account. A checking account is an account held at a bank, credit union, or other financial institution in which account owners deposit money. Account owners can write checks, use ATM cards, and debit cards to get their money. When you opened your account, you probably received checks, a bank register, and a debit card. Let's review the basics of a check. Each check has a unique number in the top right-hand corner. The check number is also the final set of digits along the bottom of the check. When you write a check, you should record the check number in your bank account register. Each check has a place to enter the date the check was written. You should also enter the date in your bank account register. Each check has a line to enter the name of the person or company to which the check is being written. This line often begins with "Pay to the order of." You should also enter the name of the payee in your bank account register. Each check has two places to record the amount of the check. One is on the line under "Pay to the order of." Here, you spell out the dollar amount of the payment rather than use numbers. The other place you record the amount is in the box to the right of the dollar sign. Here, you write the payment amount using numbers. It is important that the words you write on your check match the number amount written on your check, because this is a legally binding amount. You should also enter the amount of the check in your bank account register. Each check has a signature line. By signing the check, you give your bank permission to transfer money from your account to the account of the person or company to whom you have written the check. Each check shows a bank routing number, which is the same on all of your checks. This is the first 9 digits at the bottom of the check and indicates the financial institution responsible for payment. These numbers are the electronic address of your bank. If you use direct deposit or wish to allow automatic payments from your account, such as a payment for your car insurance, you will have to include this number on the payment instructions. Each check also displays the account number. This is the second set of numbers along the bottom of the check. You will have to include your account number when you are arranging direct deposits or automatic payments from your account. Each check also provides a memo line. Use this line for notes that may be helpful to you or the payee. When you view a copy of the check online, you will be able to see the memo line. Below the check is an example of a bank account register in which people can record transactions. Many people use their bank's online banking tools instead of writing checks. You should, however, still record all of your transactions in the bank account register. Okay, let's look at an example of filling out a check and writing transactions in our bank register. Sandy is going to pay her Excel bill by using a check. Her bill is for $58.92. She begins by writing the date on her check. Next, she writes Excel Energy on the Pay to the Order Of line. In the box, she writes the amount she will pay using numbers, $58.92. The next line is where she will write the total that she will pay using words, $58.92 over 100. At the bottom right of the check, she must sign her name for the check to be used. Okay, now let's talk about savings accounts. A savings account is an account at a bank, credit union, or other financial institution in which account owners deposit funds. Account owners can withdraw funds, but do not write checks on these accounts. Withdrawals are limited to customers. There are many advantages of having a savings account. 1, it helps you build up money. 2, you get interest in savings accounts. 3, it provides you with an emergency fund. There are some disadvantages of a savings account. 1, money is not always available. Many savings accounts only allow you to take money out 4 to 6 times a month. You may need to maintain a minimum balance at all times. Well, let's talk a little bit about interest. Simple interest is a percentage based on the amount of money you deposit. For example, Sandy deposits $100 into her savings account. She earns 1% interest. This interest is paid 2 times a year. After 6 months, she receives $1 and has $101 in her savings account. At the end of the year, you are paid interest again, $1. The total interest Sandy earned for that year was $2. This may not seem like much, but every dollar is important in savings. Most people find it hard to save. Income is generally either deposited directly into your checking account, or you make the deposit yourself, either at the bank, through an ATM, or via your phone. Oftentimes, no sooner does money hit your checking account than it begins to exit. Gone to pay an endless amount of bills. This cycle is hard to break. But fortunately, there is a way to at least better manage your money. It's called an automatic savings plan. Here, I will show you how to set up automatic transfers at your bank. This involves filling out paperwork. Let's look at the paperwork together. As you see, there are several important pieces of information needed to establish the automatic transfer. You need to write your name. You need to write your phone number. You need to write the account number from where the funds will be taken. For example, most of you will write your checking account number there. As you are taking money from your checking account and having it directly placed into your savings account. Next, you must decide if you want money transferred weekly or bi-weekly. Bi-weekly means every 2 weeks. Here, we are choosing weekly. You must decide which day of the week you want money taken from your checking account and placed in your savings account. You can choose Monday, Tuesday, Wednesday, Thursday, or Friday. Here, we are choosing Tuesday. Circle the T for Tuesday. In the Transfer To box, write your name. You are transferring money from your checking account to your savings account. Next, you will write an S or an L in the box for account type. Here, we want to circle S or write S because we are having money transferred into a savings account. In the chart, you must write the number of the account where the money is going. For example, most of you are placing money in your savings account. Write your savings account number in the account number box. In the current transfer box, write 0. In the new transfer box, write the amount of money you want transferred from your checking account to your savings account each week. Here, we are transferring $10 every week. Once we have set up the automatic transfer from our checking account to our savings account, we will be able to save money over the year. After 1 year, we will have saved $520. Remember, you can choose to save more or less each week. Making saving money a habit is important for a secure financial future. For example, Sandy wants to save $10 every week. She is going to her bank to set up an automatic savings plan. When she arrives at the bank, the teller gives her a form to fill out. First, she must write her name and her phone number. Then, she must tell the bank which account she wants to take money from. For Sandy, it is her checking account. She writes down the number. Because Sandy wants to transfer money every week, she will fill out the top block. She must decide which day she wants the money to be transferred. She is paid every Friday, so she has money transferred on Fridays. She circles the F for Friday. In the first column, she writes her own name because she is transferring money from one of her accounts to another account she owns. She then circles the S for savings account. She then writes her savings account number. Because she is setting up a new transfer, she writes 0 in the current transfer column. In the new transfer column, she writes $10. When she is finished with the form, she gives it back to the teller and her request is processed. We will practice all of this in class next week. Think about how automatic savings could help you reach your financial goals. See you in class!